Now before doing the calculations, let us see what are the basic elements of index number. That means when you are making the index number, what are the basic things what you need, or basic elements of index number, what are these? First is base year. That means base year is very necessary for the calculation of index number, because you have to measure the relative change in prices. That means change in price of commodities in a particular year in relation to some previous year, and previous year what you take here, that is known as base year. You are calculating the change in prices in comparison to the prices of base year. So base year is very important element of this. Reference year to make comparisons. So why do we need base year? For making comparisons, and that is why it is known as reference year. When you are doing the, or you are stating the price change of the current year, you have to give the reference of some basic year or base year. So in this way, this is known as reference year, which is used to make comparisons. Now what is a base year? There are two main features. When we talk about base year, then base year what you are selecting, that should be a normal year. Now what do you mean by normal year? You know that every year prices are changing, and if you say in a proper explanatory term, then you will say that there is no normal year. Every year there may be some ups and downs in the economy. But when we say that base year should be a normal year, that means we consider that no big up and down has taken place in the economy. Minor changes are there, but not a very big change. On the basis of this, that we assume that there is no disturbance of war, no disturbance or no damages of earthquake, major volcanic eruptions, etc., or there is no major type of, you can say, calamities in the country. So in this way, when we consider, we take the base year, then we consider these points. That should be a normal year. That means more or less it should be a normal year, more or less. That means no big happenings or no big disasters have taken place. Second, base year should not be too far away from the year of comparison, right? When we are talking about the base year should not be very far from the year of comparison. Suppose you want to know the price change in 2014. Then if you take base year as 1901, will that be logical? No, because definitely prices have changed, but there are other changes have taken place. The economy has grown so fast, so much development has taken place. So you cannot easily compare the prices of 901 to 2015, right? So there should not be vast difference between the base year and the current year, right? It should be not very far, and it should not be very close also. At least 2-3 years gap should be there. Then only you can compare the prices. So in this way, two things should be a normal year, and second, should not be too far away from the year of comparison. Now second element is price relative. What is price relative? Percentage ratio between prices of two periods. That means for doing the calculation, basic element is you have to calculate the price relative, and price relative is the percentage ratio between prices of two periods. Two periods, you know, that is current year and the base year. So formula for price relative is P01 is equal to current year price, that is P1. Here you can put this in bracket. Current year price is P1 upon base year price, that is P0 into 100. This is the formula for finding out price relative. you have to take out the calculate the current year price P1 divided by base year price multiplied by 100, you get the price relative or relative change in prices of current year and the base year in percentage. That is why we have multiplied it by 100. Then third element is weights. What is weight? The importance assigned to different commodities. Now, as you know that we use different type of commodities in our daily life, and all the commodities are not of equal importance to us, right? We give more importance to certain commodities and less importance to another commodity, right? And how do we judge the importance? That means how much we spend on a particular commodity or how much quantity we buy of a particular commodity that is of more importance to us. So this way different importance is given to different type of commodities. Now importance assigned to different commodities, this is known as weight. We spend more importance. If we spend more on a certain commodity, that means we are giving more importance to that particular commodity. And how do we judge it? On the basis of quantity bought. How much do we purchase or how much do we spend on a particular commodity, that gives us the importance of that commodity for us, and that is weight. And accordingly we assign the weight in numbers, imaginary numbers. We assign the weight that this much weight we give to this commodity and second one this much of weight, right? So this way according to your importance you assign the weights, that I will tell you later when you do the calculation. Okay, there are three basic elements. That means one is base year, that is very important element, then price relative, that is relative changes in price of the current year and base year price, and the weights in case of weighted index number. Weights are not needed in this case, but weights are needed in the case of weighted index numbers.